Hi everyone, thank you for joining us today. Today we'll be talking about mortgages, some basic things to do and not to do. I am joined today by Kate Robinson from Dominion Lending. I've known Kate for about 4 or 5 years now and have worked with her quite a bit and my clients as well. Kate, tell us a few things about yourself, please.
Thanks, Flav. So as Flav mentioned, Kate Robinson, I'm a mortgage agent with the Valko team through Valko Financial, which is a division of Dominion Lending Centers. I have over 11 years experience with the financing industry, and I'm born and raised in Kitchener-Waterloo.
Awesome, let's get started. In today's video, we're going to discuss the importance of getting a pre-approval, when to do it, and whom to speak with. And two of the most common questions I get asked by first-time buyers are, how is my credit score important, and how can I improve my credit score, as well as when should I get a pre-approval done?
Yeah, great questions. So for the pre-approval, you definitely want to make sure that you are speaking with an expert. So somebody like myself or a mortgage specialist through one of the banks. We are all experts in our field, which again is why you want to make sure that you're talking to a mortgage specialist, because we understand the fast-paced environment of the real estate market here in Kitchener-Waterloo, and we also stay up to date on any of the government rules and regulation changes. So you asked me as well about the credit score and how can that affect your purchasability. It's a common question that I get asked a lot, and what's the importance of the credit score is that it not only impacts whether or not you're going to qualify for a mortgage, but it can also have an impact on the rate that you would receive. So an important thing to note for clients and consumers that I see is that the credit bureau score is a number that's designed to fluctuate. A lot of people say I don't want my credit bureau pulled because I don't want it to affect my score. That score is a number that is changing month by month. So you have to keep in mind that there's various factors that affect that score. So maintaining your monthly debt obligations on time, being mindful of how close you are to the credit limit that's available. Also, how long have you had credit reporting to the bureau? These are all really important factors that play an important role in determining your credit bureau score.
Excellent. Thank you, Kate. One other thing that a lot of first-time buyers ask is regarding the down payment. How much do I need to have as a down payment? And are there any special plans that can help me get the down payment required for a home purchase?
Another great question. So minimum down payment to purchase a home is 5%. Whether you are a first-time home buyer or this is your second house purchase, it is still 5% as long as you plan to occupy the home as your primary residence. If you are planning to purchase a home as an investment property, that is a different scenario where you would have to put at least 20% down payment.
Okay.
As far as down payment savings and what's acceptable sources of down payment, we can accept clients' personal savings, so whether that's coming from an RSP, tax-free savings account, regular bank savings account. Then we can also look at accepting a financial gift as long as it is from an immediate family member.
Mom and dad or sister, brother?
Exactly, you've got it. As far as the RSP goes, another great feature from the Canadian government is the first-time home buyer withdrawal for an RSP. You can take up to $25,000 out of your RSP.
Is that per spouse?
Yeah, for each individual.
Right. Okay.
And with that, there are no tax implications for that withdrawal. So you can take up to $25,000. That money can be used towards the down payment or the closing costs. And the only catch with that is you must recontribute what you've taken out over the next 15 years.
Right. Awesome. I've had a few clients do that where they put the money in RSPs. It has to be in there for, I believe, 90 days minimum. Is that correct?
Yes, another excellent question.
And then they can withdraw it to use as a down payment and then pay back themselves. So they get the benefits of putting the money in the RSP for tax savings, then use the money down as a down payment portion to purchase the property, and then pay back themselves within 15 years, like Kate said.
Correct, yeah. Another thing that some of you might be thinking is, well, I don't have the savings yet. I don't have 5% based off of where house prices are at now in the market. But there's another excellent program available through the region of Waterloo. The Affordable Home Ownership Program is a great program that helps clients with modest income build their 5% down payment through an interest-free loan. So perhaps another topic for another video sometime.
Sounds good.
But for any more information on that, you can contact myself or Flav, or you can visit the link to the Region of Waterloo's website.
We'll have a link in the description for sure. Awesome. Thank you, Kate. Besides the questions we've discussed and answered, are there anything else you want to add that you think is important for a first-time buyer to know about the mortgage and financing process?
Yes, I definitely think that an important piece is going back to the credit, making sure you're managing your credit properly, because that can have a big impact on qualifying for your first home. So I did a little bit of thinking about the top 3 mistakes that clients make with their credit.
Sure.
So the first and foremost that I always see with first-time home buyers is having too thin of a credit bureau report. You might wonder what that means. What a lender looks at is, let's say you have a great credit score. So your score is, high 700s or low 800s.
Wow, sure.
It's an excellent score. But if you only have one credit card reporting on the bureau to generate that score, that's considered a thin credit bureau. So what the lender looks at is, it's easy for you to manage one credit card, but how about managing 2? So ideally, we want to see clients that have at least 2 trades reporting to their bureau, because that's really going to help to build their score, but also show the lender that they can effectively manage more than one credit facility.
Good tip for sure. Anything else?
The second mistake that clients typically make with their credit is having access to too much credit.
Yeah,
so I know it
the
goes opposite of number 1. So too much credit. Nowadays there are all types of credit cards. So you have your Canadian Tire, Home Depot, Walmart. All of those cards typically come with at least, let's say, $5,000 limit available. So you've got 5 consumer credit cards sitting in your wallet, each with a $5,000 limit. Now you've got $25,000 available to you. The way the lender looks at that, and the way the credit bureau actually looks at that, is if you were to turn around tomorrow and, let's say, go on a $25,000 shopping spree, that now puts you into a higher risk category, which means it's going to lower your score even if you're not using those cards. You might not even have the physical card in your wallet, but if it's reporting active on your credit bureau, that can start to impact your score.
Sure. It would be a good idea sometimes then, as even if you're not even thinking about buying a home, just to do a credit report on yourself, or to get the history to see what's kind of acting in the background that might be influencing your credit score.
Absolutely. It's never too early to go through a pre-approval, even if you're not thinking of buying for the next year or 2. At least going through a pre-approval with an expert, they're going to pull your credit, help explain those things to you, and if there's anything on there that we need to work at cleaning up, now's the time to do that, not when you have a house waiting for you.
That sounds good.
The third mistake that I commonly see for clients with credit issues or trouble building their credit is carrying a balance too close to the limit that's available on the card. So a lot of people think, even if I'm carrying a balance on my card, but I'm making those minimum payments on time, that's good. But when we start to see a client carrying more than 50% of the limit that's available as far as their balance, that actually starts to hurt their score as well. So you want to always make sure that you're not carrying a balance any higher than 50% of the limit that's available.
Gotcha.
Because with that, it essentially equates to you not being able to repay your debts in a timely manner, and that's why it's going to lower your score.
Thank you, Kate. That will about wrap it up for this video. Thank you for watching. Thumbs up and hit a like if you liked it, and comment below if you have any questions, and we'll see you in the next video. Thank you again, Kate.
You're welcome. Thank you.